The world is in a grip of a so-called fourth industrial revolution, with the promise of new technology rollout and availability that will fully disrupt ways of doing business altogether and lead to increasing customisation and democratisation of information, all happening at an unprecedented speed, blurring the lines between the physical, digital and biological worlds. There is much hype and discussion regarding the impacts and promise of things like artificial intelligence, analytics, big data, quantum computing, blockchain and cloud, and how these technologies can combine to create information insights and new levels of efficiency so far unseen. At the same time, geopolitical factors are forcing more insular thinking and less global outlook, with national governments prevailing over the interests of regional blocs and issues regarding rising inequality. There are many questions that are being posed. Will artificial intelligence automate work and lead to the elimination of whole swathes of current professions? What will quantum computing mean for cybersecurity defence? Will blockchain mean the end of a bank's role in payments and global custody? Will Bitcoin replace traditional currencies? Will regulation become more or less intrusive or ineffective even, given these dynamics? Will the notion of nation states themselves be made redundant? So, my name is Owen Jelf, and I'm the global lead of Accenture's Capital Markets practice. I'm joined today by an esteemed panel that will share their views on our industry and our world in 2025, structured into three key areas, trying to address what I've just gone through. Technologies, and which will be the most impactful and transformative? What will be the geopolitical and regulatory makeup in 2025? What does this mean for the financial services industry and its structure in 2025? What we're going to try and do now is have a debate around, I guess, the more practical elements of what we see in 2025. I mean, as Keith has just gone through, there is a tremendous amount of momentum and new technologies and initiatives in play that have the propensity to dramatically transform the industry. And obviously there are geopolitical factors and so on that will come into play. So what does this all really mean? So I'm delighted to be joined by the panel. Let me just quickly introduce them. Some of them probably don't need much introduction, but I'll start anyway. So to my left is Bob Santangelo. Bob's role is the President of International Sales at Broadridge Financial Solutions. Bob is probably a lifer at Broadridge, 25 years. He's now based out of Broadridge's London office. Previously in New York, as you'll come to hear. Bob was responsible for Broadridge's global bank, broker-dealer distribution channel, including global sales management, business development, strategic client initiatives. So in your current role, Bob, you're going to focus on growing EMEA and APAC. And as you'll come to hear, Bob is very experienced across the whole capital markets industry, front office technology, operations and so on. To Bob's left is Hugh. Welcome, Hugh. Hugh is Head of Products and Solutions at the London Stock Exchange Technology Group. Hugh is the former CTO of the derivatives clearing organisation Net OTC, having held other senior product leadership roles at Quick Financial Technology as Selkirk, now Thomson Reuters, and Infinity, which is obviously now SunGard. And then prior to current role, Hugh also led large risk innovation programs at a number of banks, and again is a veteran of the industry, having been in the industry for over 25 years. And then Brian. Brian is CEO of Torsten Technology. Again, over 25 years of experience at board level and so on. He's also the chairman of Percentile, a fintech company, empowering risk managers in capital markets, and is a board advisor to Issuefire, a fintech company, making equity cap markets distribution more efficient and more compliant. Look forward to hearing more about that, Brian. And then finally, Fiona Hamilton, who is the Vice President EMEA Operations at Volanti Technologies. Fiona's been working in financial services technology for over 30 years, mainly focused on the implementation of message and API-based integration projects. She has delivered solutions based on Swift, ISO 2022, CREST, FPML, FIX, and many other standards in the capital markets industry across many, many countries, so globally. Fiona has held board-level roles whilst maintaining a hands-on working knowledge of the ever-evolving standards and regulatory landscape. So hopefully between the five of us, we can have a meaningful dialogue. We do have a couple of polling questions, and of course, as per Nigel's guidance, these things are always better if we can take questions from the floor. So let me get us going. Let's start with the topic of technologies and really which ones are going to be the most transformative. I'll kick off with blockchain because, you know, blockchain is probably one of those technologies that's massively overhyped, or indeed, is it? Right? So if you look at currently what's happening in the industry, and Keith alluded to some of those things, it could have the propensity to significantly transform. So, or is it a solution looking for a problem? So I'll start with you, Bob. Where are you on that spectrum? More specifically, what financial services business are most likely to be transformed by blockchain? And what way will existing business models be changed?
First of all, appreciate being here today, so good morning to everyone. I'm going to start off with, I was at a New Year's Eve party 3 years ago, and there was a gentleman, technologist from a big European bank, and he started talking to me about blockchain, and I looked at him and I said, well, I work at this company, Broadridge, and we process a significant amount of trades. And he went on to kind of allude to the fact that, well, basically, you will be disintermediated and you will no longer exist because we're going to use this other technology. And I remember, you know, as I was, you know, drinking martinis, thinking, it's time to switch to water. I have no idea what the hell this guy is talking about. And I remember saying to my wife, I'm like, I think life's going to start changing, right? So, you know, that was kind of my backdrop. I went into work the next day, went to our head of strategy, and lo and behold, you know, Broadridge had an obviously a clear strategy around what we were going to do with blockchain. We were making investments. We made 2 investments into assets associated with blockchain, digital assets being one of them. And then we started obviously creating innovation labs, et cetera. So I kind of had this sense of relief. But, you know, at the time, when you talk about hype, I literally had no idea what he was talking about. And now it's what everyone talks about. So, you know, I think it's a great question. You know, is it hype? Is it real? And the reality is there's definitely an evolution that's taking place, right? Because at the end of the day, every financial institution has the same issue of, you know, ROE being nowhere near what it's supposed to be, looking at ways. I think a lot of banks have done a great job trying to create efficiency by moving people to captive sites, by looking at ways to lower cost. And it really is a technology play at this point. And I think, you know, when you look at blockchain, when you look at AI, those are 2 examples of how people are going to innovate to create opportunities. I think the thing with blockchain is it has to, you know, obviously have the right type of fit to it in order for it to be successful. So as an example, you know, you could execute trades using blockchain. Those happen instantaneously. Clearing and settling still takes, you know, depending on the market, anywhere from 2, 3 to 5 days to actually settle a trade. And fundamentally, I think, you know, knowing that you're doing net settlement, going to gross settlement, there could be issues associated with that. So I do think there's going to be an evolution, and I think that it will be something that people are going to be using in a big way.
Thank you, Bob. Thank you. Fiona, shall I come to you next?
Yeah, sorry, I was just writing something down. I think absolutely there's been a lot of hype about blockchain or distributed ledger technologies, you know, and there is a slight difference between the 2, and, you know, increasingly they're used interchangeably. You know, is there an underlying cryptocurrency? Is there not an underlying cryptocurrency? I think what we're saying is we're kind of in the phase where everybody's talking about it, absolutely, 100%. But it's kind of in the realms at the moment of, in many ways, almost being used as a marketing tool for a lot of companies, because every day you see lots and lots of announcements about this bank or this consortium of banks have done a trade, you know, done a trade finance transaction, or they've done a commercial loan, and you never hear about it ever again. So I think there was an interesting report, and I think, hopefully I'm not attributing it to the wrong consultancy, but I think it was a Deloitte report that said that in 2016 there was something in excess of 20,000 blockchain or distributed ledger startups started, by the end of 2016, 91%, I think, of them had failed. Now, obviously, that still leaves you with several thousand, but I'm yet to see what the numbers are of those which were still in business in 2017. So I guess to use an analogy, it's a bit like the Grand National with 20,000 runners. So the odds are extremely low for who's going to win, but undoubtedly somebody is probably going to win that race. And so I think in terms of what's likely to be the winners is areas where infrastructure hasn't typically been very good. I know that latency is improving, but I think typically those things which have a long chain of life, so whether those are things in the kind of trade finance area, etc. I know that's not specifically capital markets, but things which have a long life which are not really latency sensitive, I think are likely to be serviced first. You know, I think trying to replace, you know, traditional equities or fixed income settlement, you know, okay, it's not perfect, but it's not entirely broken. It's not necessarily that kind of big bang approach. So I would say, I think the niche areas that need to be serviced will be those, and then it will kind of evolve from there. So I don't see it as the panacea for everything, but I think that it has a role to play in the technology evolution.
Brilliant, Fiona. No, thank you very much. So, I mean, it remains to be seen, of course, but I think a lot of the elements of what you said, I think many of us would agree with. So, let me come to you, Brian. I mean, talking about how blockchain is going to transform, also touch on, if you don't mind, some of the challenges you see in some of the time frames. So I think a lot of the debate really is around, well, okay, I get it, but kind of when? When should I really worry about this? When should I start investing in it?
No, absolutely. So I think the first thing you say is a solution looking for a problem. And I think if I go, same with Bob 2 or 3 years ago, I think it actually was a lot of hype, a solution looking for a problem. But I think it's found a lot of problems. And the reason I think it's found a lot of problems is there's a huge amount of cash, and I don't have any sort of good numbers there, but the billions of dollars are going into that. The underlying technology is useful for lots of environments, but I think because the money's going into there, it's finding those problems, and there are a lot out there. So I see, coming to your time frame, lots of people are playing with it, lots of proof of concepts happening right now. So I think in the 12 to 18 months time frame, you'll see much more of that. It's probably more internalized, so that the bigger banks are helping their cost and infrastructure between different regions, for example, and sort of internalizing. It's great to see, the consortiums, I think, is the next, where you get a group of banks coming together and solving a particular problem and driving the cost down. And believe me, cost is still the issue for everybody around. So I think then, if you're looking at the next time frame, the medium term, everybody has got to be on top of that. Everybody's going to be having different venues to connect to. The old will exist with the new. So you will have, again, going back to Keith, I think it was a great example of the innovators coming up, and is it the incumbents that get there faster with the technology, or is it the technology guys that get faster there with the distribution? I think there will be a mixture of both, and I think the banks and brokers and sort of buy side have got to look at how do they connect to that environment and keep the whole old and the new sort of consolidated. That will help to bring down some of the reconciliation burden, because that's what we're sort of all about. And I think that if we stretch to the long term, as we begin to trust this technology, trust the is this distributed ledger technology accurate, fail-proof, security-wise, then I think that reconciliation burden will go out. But I think in that medium term, you've got to be building the trust up in that environment.
Absolutely.
And if nothing else, just add blockchain to your title of your company, and your share price is going to go up.
Piece of financial advice from Brian. Is that official Torsten advice? Brilliant, brilliant. No, thank you, Brian. Same question to you, Hugh.
So, when we take a look at, is blockchain hype? No. Is it hyped up? Certainly yes. And I think that really sort of is sort of the consensus that I'm hearing here. But when we think about the hype or sort of the vision of what blockchain is, when you really get down to it, you know, I bet in this room, if we actually started to ask everybody, what is it, there would be a pause. I think everyone can answer why we're doing it and where we're doing it and who's doing it and when we're doing it, but no one really gets down to the fundamental aspects of what is it. And that's actually what we're trying to look at as we take a look at the impact to the market. So we're looking at everything from the market participants straight through to depository. What is it? And DLT at the end of a lot of analysis in terms of both internal and external is it is a network-based consensus alternative to databases. And if we think back 20 years, 25 years, and go back to the mid-90s, we had Sybase and SQL Server and Oracle all coming out, and every aspect of the applications that we were dealing with were shifting to a relational model. And I think what DLT is, when you really look at it around a network consensus-based alternative, is a next frontier of optimization. And so we take a look at all the siloed databases, we'll turn that inside out, and DLT will help us. But the fundamentals of what we're trying to achieve ultimately won't change. We will have, you know, the market participants will actually be benefiting from a lot of this. The FMIs will be still safe and secure and driven, but collectively end-to-end will be optimized. So is there hype? No. Is it hyped up? Certainly yes. And going back to Fiona's point, the number of actually entrants coming in is actually there to empower the market participants, and that will stabilize, and we'll start to get more trust, and we'll start to get more throughput and cost efficiencies. But ultimately, at the end of the day, it boils down to what it is. And I think that's what we owe to ourselves, to figure out what it is and where. So the market participants, in terms of the where, will benefit. When we start to take a look at the brokers and the ETFs and move into the exchange traded and then the settlement and clearing depository, we'll still see a lot of opportunity and benefit there, but it'll be paled in comparison to what's happening over on this side.
Thanks, Hugh. So I guess just briefly summarising that, it is something that will become part of the fabric, I guess, of the financial markets industry, and we'll see transformation. Probably isn't going to happen immediately. It's the classic, faster than you think over 10 years, but could happen in 2 to 3 years. So we need to watch it very, very carefully. Organisations who continue to invest. But I guess I've got very, very quick questions to the panel on this. If you look at all the participants in our industry, who's most at risk over the next 5 years? Maybe, Bob, just a short answer to that. Broker-dealers, custodians, asset managers,
I
Swift?
think, the first of all, is a very difficult question to answer because, crystal ball. I think anyone that doesn't adopt and look at ways of creating a better operating model to reduce their cost, I think is going to be left behind. So I think all of the above is certainly has a great interest in doing that. I don't think there's one particular one. It does seem like some of the industry infrastructure, that can be potentially through using this technology reduced, definitely has some risk associated with it. But again, there's no guarantee in that. I think someone asked about DTC, and I think Keith's answer was pretty spot on. So I don't have a definitive, this one definitely will lose. I don't see that.
Makes sense. Hugh?
Going back to what I was saying before, I think we'll see the most disruption on the left-hand side of, by the way, for those who don't know me, I think in pictures. I've got a picture in my mind here. We've got market participants and we've got depository and everything in between. And I think we'll start to see the most disruption on the left-hand side. When we take a look at sort of the cost, the land grab, I think these technologies are going to open up more access on the left-hand side. And I think that's where we'll see a lot of the balance of change. We're in the midst of considerable regulation, which is in flight. MiFID II is in flight, and we have all of the OTC reforms and other elephant reforms that are actually seeing us through to 2020. And then MiFID III is already sort of in people's mind's eye, and that will see us through. So I think as it relates to the infrastructure community, less change. Most of the change, and choosing the word change rather than disintermediation or collapse, will all boil down to access and cost driven. And we'll see a change in players for sure on the left-hand side.
Thanks, Hugh. Brian?
Well, we're here to debate, so I'll go controversially. I'll keep the same model, and I think I'll head on for the other side. I think market infrastructure will see the vast majority of the change, and I think the vast majority would say that the technology allows that sort of network effect, and the consortiums are just the start of that. So I think that is where it happened, but I'll come back to a little bit. This side have got to keep up. You know, they've got to keep up with also this market infrastructure change. You know, otherwise they'll lose the momentum. So I think it will affect everybody, but I think you'll see it to start practically appearing in the market infrastructure.
I guess I'm going to side with Brian. Sorry, Hugh. Purely for the reason that I kind of see, you know, the active, you know, going back to what I said earlier, where I see things is kind of like things that are not quite as latency specific, you know, in terms of, you know, trading, etc. So, you know, things like registration, you know, the ownership of an equity, etc. seems to lend itself to an immutable record of ownership. Some of the, you know, the functions that custodians have to do in terms of executing corporate actions. You know, if smart contracts on, you know, things like Ethereum, etc., you know, really do start working in a, you know, in an understandable and predictable and safe and secure manner, then some of the challenges that corporate actions, and I'm sure most people in this room know what some of those challenges are, could be well served by that. So that's purely why I think it's more likely to have an impact there. But as you absolutely say, everybody has to link into that community. So it will have impacts there as well. But I think the other thing that I would, maybe because I'm, you know, a very data-focused person, is don't forget, it might be an immutable record, but if you put rubbish into it, it's only just an immutable record of rubbish. So it's not going to fix your data issues if you don't have clean data, codified data. It doesn't matter whether it's a blockchain, DLT, or a bin in the corner. It's not going to help.
And just to interject on that, I think it both sides nicely balanced as well. We have to ask ourselves the question, is it revolution, evolution, or optimization? And I think perhaps when we take a look on the right-hand side, I think there's a considerable amount of optimization. We've already started to see that. But the real change in terms of what I would refer to change in terms of, quite frankly, upset business models will be on the left-hand side. So it's just a slight answer.
Yeah, I think it intersects with the API economy that you're seeing emerging with open banking and PSD2 in the payments world, because the way into a blockchain or distributed ledger is API driven as opposed to the way that the industry has worked for decades, which is more message-based.
Brilliant.
Okay.
We like a bit of debate. So
I've got one question. I like analogies, right? So looking at the title of the slide, 2025 is our target date, right? There's been an industry which is called the automation industry, the automotive industry, okay? They put a target of electric cars, driverless cars, everything else that they're going along. So can we have an analogy against our market? What is the diesel out there? What is the petrol? How's that going to be moved and shifted? What are the cars? What are trucks? What about the taxi drivers? What about the lorry drivers? Where will they go? So can you give me a view in terms of 2025? No one can predict it, right? But what do you think are going to be the fallouts for 2025 from the, it's not the same as dropping the people or the actual processes that people do, but technology-wise and fundamentally, how will the market be looked at in 2025? They've got a goal of electric cars only being produced in 2025. That doesn't mean to say that there's not going to be petrol cars and diesel cars in 2025. I'm sure there will be. But that kind of view, what can I get a vision from you guys on what that would look like?
You know, I love these crystal ball questions because it's interesting. My prediction is that I think that when you look at the way that global transactions take place, that you know, the instantaneous of it, the speed of which that they'll be done, you know, whether it's payments or actual executions of trades. When I look at the infrastructure today, I see it being so much more efficient, so much smaller, and so much more global. So I think that interconnectivity, I think the success of, you know, what people are going to do to innovate will have a dramatic change. So when you think in terms of a typical global broker-dealer and how they have operations and centers of excellence, I see that being, you know, literally a quarter to, you know, some vastly reduced, you know, center of excellence that actually is fungible, that could do, you know, pretty much anything that they need to do. And between, you know, what you're seeing with digital ledger technology, as well as AI and moving everything into the cloud, and how you could secure data and not have to have, you know, kind of the typical bricks and mortar type data centers, I just see it shrinking and being something that's significantly smaller than what it is today and vastly more efficient, and will have an impact on the overall ROEs of banks.
If you take a look at the sort of the ROE and efficiency side of things, I think that projection is absolutely apt. I don't think a lot of the model is ultimately going to be changing. It'll just be considerably more efficient. If you take a look at sort of, myself, I live just down the street, and when I come to work some days, I just need to get from point A to point B. In the future, unless humans and geography changes, you still want to be able to go from point A to point B. So if there's an automated car, if there's a taxi, if I actually call for it by sort of thinking about it in terms of the near future and it's predicted, I will still need that service. And I think back to 20 years ago with one of the corporate treasuries that I was working with, they manufactured chicken parts for chicken wings and the like. And they needed to buy grain futures and they needed to sell chicken futures. In terms of like the machinery is still going to be the same in terms of our basic needs, but it's going to be a lot more efficient. And so when we take back, and I come back to that analogy again in terms of sort of the layers of what we have in the market, the same business mechanics will be there. I think we're protected from a regulation point of view for at least the next 5 to 10 years. There isn't going to be considerable change. The players will certainly change. The optimization will certainly change. The costs to the market participants will certainly drop, and that'll open up a lot more opportunity. And so in 10 years' time, in simple, same model, just a lot more efficient and perhaps a lot more players on the left-hand side.
No, I agree. I think it's all about the cost theme. It's not just the efficiency of reconciliation, etc. I think it's also moving to real time. We've got real time settlement in certain areas, but I think that becomes much more standardized and commoditized. I think that drives down the capital requirements, that drives down the cost, it drives down the risk, and hopefully that can be sort of passed on down the chain to the sort of end investor. So I think that will be a dramatic change. I think we're still in, if I think about capital markets and the finance industry, we're still in a relationship sort of business. I think relationships are still, important, the sort of human aspect of that, and, who you trust for your financial advice. Believe me, put blockchain in your title. But who you trust for that, I think, is really important. But the other side of it, the operational side, I think will be dramatic effects. How I relate that to electric cars, etc., I'm afraid, maybe you can buy a Tesla for 1,000 instead of 100,000, who knows?
I would say, have a look at what's happening in the payments industry, which has been driven largely in the EU by, the regulation. And I think the regulators forcing APIs into a market and saying you must be open, you must allow third-party payment providers to initiate payments, to provide account information services. Once you've done that, then you open up the market to new entrants that can add value-added services or can create alternative ways of doing things. And a lot of the innovation is obviously done by small, start-up companies, and it may be that, somebody's at university now and they've got a great idea. At the moment, capital markets regulation isn't enforcing that, but we all know what, generally the European regulators are like. Once their focus is, moved off with PSD2, they'll go, right, let's take that same openness approach to capital markets, and I wouldn't be at all surprised if future versions of MiFID 3 or MiFID 4 within those timescales start to open that market up. And then I think we're probably not best positioned, because we've all been in the industry for ages, to know what those new solutions are going to look like.
Then we have another question for the floor.
Okay.
Who you are?
Gary Wright, BIS Research. Looking at 2025, what about the introduction of new platforms like an Amazon, totally disrupting, providing alternative type services? Is that a possible or is that not a possible? If it is possible, what happens to the current market infrastructure?
Hugh, do you want to start that?
Sure. In our sort of work, we have to contemplate those questions, certainly. And I think, Fiona's been talking about interfaces and data movements quite considerably, and I think the root of the answer will lie in there. If we contemplate a world where we have an Amazon for network management and asset posting, and then slap on a little bit of eBay from the point of view of price discovery and settlement, what those are front-facing storefronts to, and I'll keep saying it again, to the market participants. The big land grab that Keith was talking about in his presentation is just that. There is a massive opportunity out in the marketplace, and having those front-end elements to be able to drive that will, in turn, drive very regulated flows as we start to take a look at the exchange, the settlement and the depository elements of that, even the broker and sort of the price discovery around those fronts. So yes, I believe there will be a day where an Amazon and a sort of eBay type environment will exist for the front facing and simplification and lower cost to benefit, time to market and price point, which we all need to serve for our customers. But behind, I think we'll still have the same models optimized, perhaps smaller, but the same models nonetheless. So it's definitely possible, but I think it'll be on the front facing. Just on a sort of corollary, we see that with Amazon, right? With Amazon and eBay right now, we are doing that right now as individuals and as companies. And from that point of view, the model is there, but there's still manufacturing, there's still settlement processes that are existing on the other side of that. So the Wizard of Oz shroud, if one really wants to call it that, that's my humble belief.
Bob, I think you were.
No, I actually would echo. I mean, you definitely know that space better than I do, so I agree. I mean, it seems logical, absolutely.
I mean, just going back to Nigel's analogy, I think it's an excellent one. If you look at the reasons why the industry is moving, say, from diesel to electric, is to solve the issues of the environment, the fact that diesel is actually quite an inefficient technology in its own right, and is actually harming the environment. And if you move the analogy forward, it's around self-driving cars and automation. And there are parallels in our industry, because if we take why blockchain seems to be a solution to a problem, the industry does suffer, as the panel has said, with fails, delays, lack of transparency, inefficiency, which the technology, through its paradigm of sharing a distributed ledger, has the propensity to solve. And then if you layer on the other aspects of new technology that Keith alluded to, artificial intelligence, cognitive, analytics, big data, and so on, that can then provide the self-driving bit, the automation bit. And I wonder if that maybe is even more scary than the potential disruption of caused by blockchain, because I think, as the panel has broadly alluded to, is not necessarily an industry participant eliminator. It will make the industry more efficient. So global custody probably won't disappear. But with artificial intelligence, and I'll put this question to the panel, does that imply that, in effect, the financial industry becomes self-driving, almost automated? Is that perhaps a very scary prospect, where the front office kind of operates automatically and there isn't anyone in the back office, because you don't need anyone in the back office? Is that a vision of the industry? Could that happen by 2025? Could it happen earlier? Bob,
Yeah, look, I kind of agree with what everyone's saying around optimized models. I also am a big proponent of, I do think as we move forward, mutualized models are going to be very, very relevant, because I think, again, banks, having their own infrastructure, having their own, way of actually, for instance, processing trades, I just think that their cost basis is going to be really out of whack compared to people that actually figure out ways to get into mutualized models. I absolutely believe that AI, because Broadridge is a big participant in using this today, both RPA and machine learning, and is actively working with our client base as well as our own managed service teams on how we could do more with less. And just as we're evolving into that, there's just really great examples of how you could take what is requiring a lot of manual intervention and actually optimizing that. And instead of having 200 people doing something, you're now down to 100 people doing something. And I think as that evolves and they figure out more ways to use cognitive technology to actually resolve things that normally you have teams of people resolving, I do think that efficiency will shrink it. I don't believe it'll ever be zero, because I do think you need people talking to people, because on the other side of those transactions, there's definitely going to be some issues and some resolution that will need to take place. But they can absolutely, no question about it, automate things to the point where you could really reduce the amount of operation staff, as an example, that you have servicing your business today. I definitely see that.
Thanks, Paul. Hugh?
Building on Bob's observations of efficiency as it relates to manpower, on top of that, if we take a look at where I spent most of my career, which is on the market participant side, sell side, investment banking to be specific, and my opinions in that regard don't reflect that of LSEG and its regulated businesses, just need to get that in there. But when we take a look at what's happening now with machine learning and AI, you can go up to an investment banker's portfolio and say, you do realize with those 100,000 trades, your goals are X and Y, and you could actually reduce that down to 50,000 trades in these equivalent trades, and you can actually get the same benefit, reduce your capital, reduce your charges, and I think in there, the ML and AI are going to really help the end goal of sort of hedge effectiveness, sort of goals in terms of ROI be achieved much more efficiently. And I think that's where we're also going to see a lot of interoperability of these new technologies that we all have to work collaboratively with to be able to dictate actually and embrace, so that we can actually make sure that the flow into the core FMI sort of environment remains stable and the same. So there's optimization throughout, but it is, again, optimization, evolution, not revolution. Yep.
I think the absolutely optimization side of it is, a lot of the people cost has gone by sort of moving to sort of low cost countries and environments, and ever more squeezing out of that. So I think that's one aspect that will absolutely continue. I think the other is where does this create sort of new innovation and sort of new business as well? Because I think that's taking place. It's taking place already, and there was some anecdote of some analysis that done within a bank, looking at all the clients, looking at the failure rates. It was actually quite anonymized, but the end result was a real peak of this one particular client, this bunch of clients here. And they found actually it was their internal regional offices that were causing the problem rather than external clients. So that sort of analysis, I think, is vital to sort of keep the cost down. I think one of the exciting things I see is the natural language side of things. There's, I think you can get apps now if you want to look at a foreign menu, and it'll translate it for you in real time. Going back to Star Trek, I remember a little earpiece that you can put in your ear and communicate with anybody, around the planet or across another planet as well. But can you imagine that situation where you're dealing on a global basis, interactively talking with somebody that actually is speaking your language effectively, even though they may be Japanese. So I think there's some really exciting things on the on the side. Going back to the Amazon question, I'm surprised there isn't a Amazon Prime.bank type already. I think that should be tomorrow from a consumer customer point of view.
No, absolutely. I mean, we keep mentioning Amazon, but obviously Amazon have applied for, and I think probably are, a payment services provider. So they are going after that payments market big time. And companies like Amazon, once they vet that one, they'll move on to the next one. So it kind of relates back to Gary's question. We'll see them. The things about the human interaction with machine learning, artificial intelligence. Many of us, I'm sure, have probably got Amazon Alexas at home, etc. And even probably a year ago when I bought mine, it is now demonstrably cleverer, in quotes, than it was 12 months ago, because it's continually getting better, and it's better at interacting with you. So it's still not like having a conversation with a real human being, but it's a bit like Moore's law, with chips. It will get twice as clever every year, 18 months, etc. And yeah, there's lots of other technology, like you mentioned, Brian, the old universal translator from Star Trek. Well, Google have already announced that. It's an earbud, and in real time, you can have a conversation with somebody who speaks Italian, and you don't speak Italian, and all you'll hear is English, and all they'll hear is Italian in real time. So we can't really sit here and predict, I guess, an awful lot of what the impacts of these things are, because prediction is a very risky thing. In fact, I brought one thing to actually talk about prediction. Don't know if anybody else is old enough to remember the little cards you used to get with tea. tea bags. So you can tell how old this is because it says 5p brackets 1 shilling. So I think this was 1972, and I collected all 50 of the race into space. And the very last card says that we will have landed on Mars on August the 6th, 1982. So I'm very disappointed by the predictions in this, so just be very wary about predicting things.
Gary,
Yeah, it's me again. Just really setting up my Brexit panel this afternoon. All the things we've been talking about. Does it actually matter, post-Brexit, where the infrastructure is in terms of, international global? I mean, we're talking about the technology. We're talking about, trading internationally. Does it really matter, with Brexit, whether we're in or out or wherever we are, as an international trading centre?
Brian, let's start with you.
I think practically, no. I think, from a technology point of view, from that standpoint, it really doesn't matter. We're completely and utterly global. Politically, I think, that's a completely different story. I think we're seeing changes in the geopolitics, as we speak. Just thinking, taking it off a little bit, going on to regulation, but if I go back a year ago, I was completely convinced that the US highly regulated sort of environment and European was sort of heading east, and then Mr. Trump sort of turns that around within 12 months, and I think actually maybe the regulation is heading the other way, and we're going more towards the way that East currently works, the Far East currently works than the West. So I think the politics, I'm afraid, will always interfere.
I think the politics break down into sort of several layers. You take a look at, everyone likes to own their sort of piece of the puzzle, but when we take a look at where the regulation of the entities get approved, be it in the US or the UK or in Europe, that's first and foremost. And after that, people have a choice of where they choose to actually put their infrastructure. And so long as it's resilient and scalable, in theory, that sits behind the business and the front store of where those regulated businesses lie. So I think the politic really sort of needs to be broken down if one's advising people during this discussion. This is, okay, where is the entity regulated? Thereafter, does it really matter from the point of view where their systems are run, so long as the people who are held accountable are in control?
Just one comment. Going back to my analogy with the cars, right? One of the things that everyone had to overcome is this fear that a driverless car will not crash. Okay, so we kind of down that road. People were thinking that's fantastic. What about a driverless operation? If we've got no one there and it's all technology, are the regulators going to be happy about that? Are shareholders going to be happy about that? How do you see that shifting?
Yeah.
Brian, Fiona?
No, go ahead.
Bob?
Yeah, I actually just reflecting something that sort of Fiona mentioned before. I think actually, firstly, driverless cars. I'm still not I'm still not going to get in one until
Neither am I.
for another 5 years or sort of a decade. But I think Fiona mentioned, garbage in, garbage out. You can automate all of this. You can put AI on top of it. It will only be as good as that data going in. So, AI consumes the data you put in there. It predicts on that data. If you don't put the right data in, it will predict incorrectly.
Fiona?
Yeah, I mean, it's kind of related. Is that we've talked a lot about the technology in terms of how transactions are done, what the decision making is, etc. But there are other technologies out there that could potentially have even bigger impacts in terms of the the global economy and how the financial markets work in general. So, for example, I would posit that the kind of the creeping thing which is kind of coming up, which I don't hear a lot of people talking about, is 3D printing. So at the minute you can, there are prototypes for, well, they're not prototypes, they're actually doing it in China where they can 3D print houses complete with plumbing, etc. 3D print a car, 3D print proteins and food. So we're back to Star Trek, the replicator. So that again is going, at a huge rate, and therefore you suddenly see, actually, all those jobs that have been outsourced in kind of services to make T-shirts for, retail firms that make things, suddenly it's just raw materials and whoever makes the 3D printers. So you could potentially, within that 2025 timescale, have hundreds of millions, if not a billion jobs disappear. You add in AI, that's more services jobs. So suddenly you've got a world where a very large number of people simply don't have a job, and everybody in other revolutions thought, oh, well, they'll all go and work in the services industry, but AI is going to be doing a lot of the services industry. So that has a huge impact on, the markets in general. So, it's all very well saying it's going to be blockchain or whatever, but there's probably other more influential things.
Yeah, just sort of building, Mike Jones, show witness, just building on that point, I've never known technology moving so fast, concepts moving so fast, incredible speed. And yet, one of my granddaughters is in her third year of maths, and she was showing me her cryptology paper, and I spoke to her tutor over a drink a few weeks ago at Christmas. And he said to me he'd heard of blockchain but didn't really know very much about it. And I'm wondering where all the people are going to come from that have ever-increasing knowledge, are brighter than we've ever produced, that are going to keep fueling this fantastic march of everything that you've been talking about, and whether we're going to end up with a very tiny population of elite who understand it and a vast number of unemployed who don't.
That's a fantastic question. Obviously, being from Accenture, I know the answer to that question. No, joking aside, there's much debate in the industry at the moment around this particular issue, and it's, is the technology revolution and the pace it's operating at really going to leave whole swathes of people behind, either unemployed or the fact they just don't have the skills, and create a high-pay, high skills sector and a low-paid, low-skilled sector with nothing in the middle. And that is a massive issue for society if we think about it. So we do have to deal with it, and the various strands of our society, academia, political, governmental and business will need to deal with it. But certainly from our perspective and what I see in the technology industry, there is a lot of investment and focus in skilling the next generation in the new paradigms that are coming up. So at least that's my view. But I'll open it up to the panel.
Yeah, so, interesting, if you go to a grocery store today, right? It used to be, same with a gas station, well, maybe not here in the UK, but, people used to pump your gas. Now they don't do that. Checkout counters have self-service because there's less people. This has been going on actually for some time. I'm not so sure the financial services industry was ever right-sized in the first place. It was when margins were huge and the trading, but they have no choice. They have a shareholder responsibility as publicly traded institutions. And, there is going to be change, and people will have to figure out how to, to get the right type of, training. And I think we all have a responsibility as service providers as well as financial institutions in general to actually have programs in place to actually do that training. And I know Broadridge does in a very big way. My son, graduated and is working at Fidelity, and he's working on blockchain right now. So, I said to him, you have no idea how lucky you are, as opposed to being stuck on the legacy mainframe and training and still, coding COBOL, right? So there is a shift that's going on, and I think we have to make sure that we're participating in that, because, even Amazon, at the end of the day, grocery stores, what they are today, in my mind, will not be anything what they're like in 5 years from now. And I was out in Singapore, and I had a client say that, his belief was even the buildings that we have and people commuting in, he said, I could see in 20 years my son saying, why did you have to commute to work every day? because I think technology could potentially change why we do. I mean, now people do need to get together, and there is going to be, people that, obviously need services and stuff like that. So, maybe it won't be as dramatic as I'm saying, but you kind of, it's happening in front of us right now. It really is.
If we think back to 2001, the dot-com bubble bursting, 1999, 2000, and 2001, we had everybody saying, oh, well, businesses will be run by these young people now. And it was really getting out of hand, and I would hope to say I was younger then. But when we look at it, there was this concern that all of this great experience from everyone who actually built manufacturing and sort of proper businesses in the 70s, 80s, and 90s were suddenly out of a job and were going to be replaced. Well, thank God, the bubble burst, and well, they all went insolvent and so on and so forth. And what that represented was a big change shift in terms of how we think. And we have nice web pages and everything as a result of that, and do e-commerce and the like. And I think we're just in another step change right now. And Owen, to your point, my daughter, she's 16, and she's learning about social media and social media management. So I would like to hope, I might not be right, but I would like to hope that the level of education is broadening. Will we end up with a mass population of people who are out of jobs? I hope not. I think there'll be a big shift, because as we look to sort of maximize our global reach for farming and for manufacturing and for sales, if there's a replicator, there's going to be someone who needs to manage and sell that replicator. If there is a Google Translator, there's going to be a team of people to be able to manage that. So hopefully it'll be just a shift. I'm not going to suggest that it's going to be relatively straightforward and business as usual, but there will be a shift, and fingers crossed, we're just going through a step change. It is a massive change, you're absolutely right, but at the end of the day, after the what of the engineers, business is, for the most part, running as usual. It's just broadening its reach, one hopes.
Yeah, I think just building on that, I'm an optimist and probably naive, but I think there is a sort of natural balance. If you get mass unemployment, who the hell's going to buy those services that the other half are delivering? So, I think there's a natural, and particularly in a democracy, I think there's things that bring that back into balance. Not that necessarily we're in the right balance at the moment, but I also think the creativity. If again. Kids have got out of the teenagers just about, but they spend what used to be their pocket money is now their own earnings on applications on an iPhone that didn't exist, and they get pleasure out of that. So there's new industries that I think crop up very quickly, because we're generally pretty creative people. I think you do make a good point. It's a step change, but is that accelerating? Is each step becoming such a 5-year change used to take 20 years, and I think that is quite scary, because I think can we cope with that sort of speed? But I think if it's another generational step change, within a generation, I think we can cope with that. If it gets faster, who knows?
Yeah, I mean, I don't think we should be worrying about running out of people that understand technology per se, because people that were born in the 18th century couldn't comprehend steam engines. Your average 2-year-old now, you regularly see 2-year-old children working an iPad, and even when you show them an actual hard book with a picture, they immediately start wondering why they can't make the picture bigger on a piece of paper. So cognitively, kids now are hardwired, so that concepts that we as an older generation might, maybe have to struggle to understand a bit more. My mother can't work an iPad. I bought her one 5 years ago, and I've given up. She just can't get her head around those concepts that a 2-year-old child can do now. So, but there's also a difference between understanding how to build technology and how to use it. So the vast majority of, everybody in this room, I'm sure, has a smartphone, but how many people would put their hands up knowing how technically near-field communication works? Whenever you use, your PayPal or your Apple Pay or whatever, who understands how, GPS really works, who understands how all the technologies that sit behind 4G networks and 5G networks work. You don't have to, but you know how to use it.
Brilliant. We have a question at the back.
Perhaps a statement more, Fiona, the fact your mother can't use an iPad, mine can, you really are better off. Simon Jones, London Metropolitan University. So just a couple of reflections on a really interesting conversation at this moment. The first I would offer is that if you go back 5 years, 1 in 4 UK undergraduates was doing a business degree. That's now slipped to 1 in 6. We had a balance of around about 55% male to 45% female students at university. It's now 60-40 and the trend is increasing. And if you go back 5 years, it was 10% of all British undergraduate degrees were beyond the Bologna, effectively European boundaries. It's now 26%. So British universities have over a quarter of their business beyond Europe. It's dominated much less by business, perhaps if you look at particularly the Far East, by mathematics and by engineering, by computing. And so the infrastructure point is actually, I don't think it's necessarily going to be our kitchen tables at which this trading is going to be done. Just as a by your way, as you see government sort of shift around as well, the current restructuring of universities, you see the tip of the iceberg, which is called Vice-Chancellor's pay, sees that, at the moment anyway, there is a total deregulation of quality assurance and regulations around anything that isn't UK and particularly England-based. So at universities at the moment, where we have a falling, for the 3rd year in a row, a falling recruitment to undergraduate degrees, we have an unregulated 25% plus of our industry, and it's really interesting, but you won't read it in the pink press. So, what's the future for us? Genuinely, I don't know. I think that with the borders up and stopping international students coming into the UK, we as an industry reach out to them instead, and that in itself has a corruption and probably an influence on your industry, because as we're churning out these graduates, they may have style. I endeavour to make sure in my faculty they have substance, but there are undercurrents and there are headwinds against which we are currently battling. So not a question so much as a really miserable set of comments.
Does anyone want to respond to that from the panel? To advise the move, maybe?
I do not. I don't really know the UK system all that well. I would assume, in the US, I can only speak just because I'm new here, but, government and businesses really do have to encourage people, have to see that there's good careers and good rewards associated with being, in technology and engineering, and if they don't, then unfortunately you're going to have, this diminishing set of students that are graduating or going and not getting those types of degrees. So I think we all have a responsibility as bodies like this, ISITC or just in general in our industry, to try and encourage people to really be in technology, because that's where the future is. And I do think with millennials in particular, because they use technology the way that they do, I hope that there is a trend that people, particularly younger people, do want to be building the next smartphone or the next iteration of blockchain, or they look at Google and how exciting it is to work for a company like that, or Amazon or Apple or any of the other companies that are around that do those things, and want to join them for that reason.
Yeah, I mean, I think that a lot of the millennial generation, or whatever the next one's going to be called, I think maybe are doing less in terms of business degrees, etc., because a lot of them see technology, engineering as the way. They don't want to work for a big company. What they want is to create their own startup, or get together with a few other people and do a startup. I mean, that startup, generally speaking, will fail, but then they'll probably go and do another one, and eventually they'll either be successful or they'll go and join a big company, but they'll have had that experience of trying to innovate, which the big companies then benefit from, and then they get into business, as opposed to studying the theory of business. Well, is that as valuable as somebody that's actually done their own technology startup and learnt by failure?
I think that's a really good point. I think one of the most attractive things, I've got a 16-year-old daughter who is actually contemplating university, and she solely wants to take a look at university degrees that are actually have a co-op program. Learn, logic, apply. Learn, logic, apply. And you know, myself, I was a math and computer science, and now I'm over in marketing and management and operations. And I think the secret to, a lot of this and the trends, especially as students are looking, if they can be educated on just applying pure logic to problems, be they engineers, be they computer scientists, be they business or finance people, at the end of the day, logic prevails, and that's the real weapon in all of this, is making sense of materiality, the magnitude, and options.
Yeah, and I think that, you know, the base technology is a small part. You just think of, you know, you've got your smartphone, just think how many apps you've got on that, and that's building blocks to, you know, ultimately to the creativity at the top. So I think you do need, you know, you don't need everybody as being engineers. You build the building blocks and then you get the creativity on top of that. But that innovation that can then lead on to, you know, maybe we do get one of our unicorns in the UK at some point.
Absolutely. So I think, Nigel, we have time for one more. So, do we have another question from the floor? You don't have
It's always the other side of the... Sorry.
Hi, Grant Harper, Fiserv. We're looking at the future model. I guess what I'd like to understand is we're seeing an unprecedented amount of money being put into the blockchain technology through the cryptocurrencies. Is there any comparison we can draw with older technologies where we're seeing public money underpinning a technology which essentially could not be adopted if regulation and use cases can't prevail? I guess I'm just really trying to understand, are there any lessons learned from the past that we could look at the future model?
Great question.
Apart from the Dutch tulip bulb industry, Scythes, I mean, obviously there are, inherent issues at the minute with some of those cryptocurrencies, and I was just reading this morning, I think, on one of the news feeds that Stripe have dropped support for Bitcoin because they've said Bitcoin is essentially useless as a method of payment because of the volatility of its price. So, but that's public money, as in lots of people have, speculated, lots of people have been buying electricity in China and, Serbia and places like that to mine Bitcoins. Is it going to have longevity in the long term? I don't think any of us actually know, and obviously the market doesn't because of that volatility. What I guess worries me a bit is the fact that, some of the regulators know, have granted, trading status, and once you get to the point of then building, which will eventually come, derivatives on top of a weak underlying, you've effectively just reinvented, the 2008 crisis where you've got things being priced based on an underlying which could literally drop in value by 99% in a few days. So I'm not sure whether that answers your question, but I don't think the cryptocurrencies themselves are the same conversation as is a blockchain or a distributed ledger a good technology to adopt. I think the cryptocurrency discussion is a completely other debate.
Yeah, if I carry on with the cryptocurrency, but come back to the block ledger. Cryptocurrency I see is an emerging asset class. There's 1,000 whatever it was up there that are around, but I see that as it's not really a currency. It's not quite an equity. It's somewhere in between. It is a separate asset class, and I think we'll see the development of that asset class. And like any emerging market, it's swinging quite violently at the moment. So I think that will settle down. I think actually it's a really interesting asset class to see how it goes going forward. I think coming back to the amount of money that's gone into blockchain, I don't think it's all gone into the technology substance of that. It's gone into how do you take that and how do you apply it and all the proof of concept going on. I think when you look at the big numbers, it encompasses all of that. So how are we adopting? The final one is just put a quick analogy there. I'm not quite sure it works as well as it should, but VHS, Betamax, there's a few of those out there. There's a lot more about them, and I think they will consolidate onto you might spend a lot of money on something and it might be wasted, but you'll have gone through a journey that's, you've picked up an awful lot anyway, and then we'll end up standardising a little bit more in the future.
Brilliant. Thank you very much, Brian. Thank you, Fiona. Thank you, in fact, to all the panel for the discussion. So Bob, Hugh, Brian, and Fiona. I think hopefully that was a very good debate. I mean, clearly there's a lot of questions that have been debated, but a lot more debate to come. So could you just join me in thanking
Thank you very much.
these guys for that?